My name is Matteo Rizzi. I am currently a venture partner for Omidyar Network, which is the founder of the eBay founder,
Yes.
as well as the founder and CEO of Fintech Stage, which is an organization that I founded 2 years ago together with the former CEO of Swift, Lázaro Campos, now my partner. And we use Fintech Stage to help build fintech ecosystems around the world, in the kind of a continuation in what we did with InnoTribe back in 2008, when together with 3 others Swift employees, we funded that beautiful movement that is still, kicking asses today.
I also know that at Swift, in 2008, you co-founded the innovation arm of Swift. And can you share your experiences? And also, maybe you can tell if you believe that innovation is something which is thriving from the startup area, or you can actually build it from within of the big corporation as well.
So, basically, building InnoTribe in 2008 was a challenge overall. One, because everyone seemed to be talking about innovation in financial services, but no one was really doing much about it, with very few exceptions. Point number one. Point number two, startups weren't really defining themselves as a fintech startup back then, right? So we created the first startup challenge, and the first startups that basically pointed themselves out were TransferWise or Currency Cloud or Moven. These guys who are today the confirmed ones. Some of them are even unicorns. Back then were really at their starting point. So it was an ecosystem that was really scattered. We tried to put them together, to put these guys together, and of course doing it under the brand of Swift, it was much easier because we had this neutral sort of position towards the market, and also the nature of our effort was really about gathering innovation in financial services. So we were moved by the right, our heart was in the right place.
Yes.
Okay. Now our experience in and my personal experience in looking so many financial institutions, trying to foster innovation within, obviously, it is always much more complicated to do it totally from inside, because usually you need, I talk about this so many times, you need a bunch of misfits, in the organization. You need a bunch of people that are not thinking with the normal parameters of the rest of the company.
Yes.
You need people to take risk. You need, the executive of the company to be able to accept failure, which basically implies that more often than not, if you use it or if you start collaborating with startups, they not only, bring you a fresh perspective on the innovation or on that particular business you're trying to disrupt or to innovate, but they are as well the people you can blame, right, if something goes wrong.
I believe in those situations, you really have to give those people independence so they can make their own decisions within the big corporate structure. Otherwise, they would be just stopped by the bureaucracy that you have within.
Absolutely. To me, the critical issue here is money. So basically, whether or not you're able to fund these startups through your internal corporate venture capital, or you're able to give them enough independence to be able to, indeed experiment within or outside the company, but with their own legs, and without getting trapped into the, your day-to-day complexity. That's the key. Which is why, few financial institutions, and I actually worked became a partner of one of them. So the SBT Venture Capital was actually one of the first fintech funds from Sberbank, the huge Russian bank.
Yes.
And I think we were, if not the first, but certainly amongst the first, corporate venture capital that were completely separated from the bank. So with a degree of freedom and of independence from the institution that allowed us to be probably more effective than others.
When we talk about innovation, financial innovation, big institutions, financial institutions, they still trying to maintain the status quo in terms of how the things are in financial industry. Do you believe that by participating, and I mean startups, by participating with big organizations, they kind of also keeping the status quo rather than trying to disrupt the business models and trying to create something which is really new? And maybe that's where the investment capital from the VC funds is coming into place.
So the fintech as we know it, or as we all talk about it, was born roughly in 2008. Okay, it's not even me saying this, but if you look at what Accenture is saying, is that more or less when I would say that movement officially was born. And I say the way we see it today, right? Since then, true disruption was very little. So what happened so far is that, and this is one of my favorite sentences, I don't know, I cannot count how many conferences I talked about this, is that what startup did so far is that they basically took the very basic inefficiencies of banks and tried to make it better, faster and cheaper. That's it.
Yes.
So, and they got a lot of money. Why? Because banks feel comfortable. They knew they had customers for it.
Yeah.
They knew that the need was there. Whatever service that the startup can offer, say in alternative lending or in mobile payments or in scoring or whatever, it is way better in terms of user interface, efficiencies, speed, than what the current bank can offer. So it was very logical. So the banks either became investor or customer.
In one of your articles, you're talking about 3 billion of unbanked people, and you say that it's a place where we have to go and disrupt, and it's opportunity for startups. Do you believe that the real innovation will happen in those places where there are people and banks, there are no systems in place, and you can do whatever you want? Or it will happen here in the Western world where you have legacy systems and established functionality. So where is the best place for startups to innovate?
So I don't think there is, of course, a 100% true answer to this. I can give you my opinion. I mean, certainly, in that post that you mentioned, I was referring to the opportunity of banking better the underbanked. The underbanked population is, of course, containing the unbanked as well, so people without a bank account. But if we talk about developed markets, there are a number of people who are really very poor when it comes to how to manage their money.
Yes.
And this is why there is a huge underbanked population in any country. In the UK there are 2 million people without a bank account, for example. Yes. And in France the number is much higher, and in France there are 10 million people who are underbanked, for example, right? So this being said, obviously in emerging markets the regulation is, I would say, more flexible. Because they have no previous comparison with anything else that happened in the market before. Startups, entrepreneurs, and company and people are actually more eager to try new things because they actually have no other alternatives. So it's not a coincidence that the biggest in the world case of scale is Mpesa, from zero to over 60% of the population covered by,
Do you believe it was an outlier, or is it something which can be repeated constantly?
I think that Mpesa is, at the moment, not successful to replicate that very same model with that brand in other parts of Africa. Mm-hmm. But if you look at how the ecosystem of Mpesa evolved into, payments first and then scoring personal scoring and then lending on the top of it, you actually have a great example of how an ecosystem started from the transaction and then goes into the services and the businesses. So my answer is yes, that model is replicable, and the way it's going to be replicated is when bank and telcos will actually be able to marry to basically provide ultimately credit. So using the telco transactions, applying alternative credit scoring to be able to assess the credit worthiness of underbanked population and start providing credit. So this is a combination between financial institution, telco, and actually startup.
One of the important features of the credit scoring is a unique identifier. So to be able to KYC the client, to know who the person is. And now we're talking about ID. So, and I know in your articles, as well as during conversations, you've been very proactive in terms of talking about ID management and the future of ID. So, do you believe that systems that we currently have, they are sufficient to be run in those developing countries as well, or we have to come out with the new systems, for example, distributed systems of ID management and ownership as well?
So the reason why I got much closer to the ID ecosystem is actually twofold. One, because within InnoTribe at Swift back in 2009, where actually distributed ledger did not exist in the way they are known today, we actually funded a proof of concept that back then was called the digital asset grid. And the digital asset grid involved back then people who are today the top researchers and entrepreneurs within the identity space. And the digital asset grid was nothing else than a permissioned, decentralized data store with multiple drawers where you could store different aspects of your identity. And using a new protocol back then, that today it would be obviously a distributed ledgers, but back then was a bit more complicated because 8 years ago the access to that technology wasn't that obvious. To basically start exchanging, So it was an interesting why Swift funded it, because it was a way to think of other models than a centralized model, right? And going to the multi-distributed one. So with that experience, today with Omidyar Network, we are actually working into enabling identity as a step zero of financial inclusion, because obviously, as you rightly mentioned, you need to have the possibility to uniquely identify the person to be able to put him or her in the system. So we created an investment thesis that is called Universal Identity, and we believe that the best identity programs are issued by the state. So part of our effort is actually to help state-led identity programs like Aadhaar, for example, in India, because we believe that once this ecosystem is in place, then everything else will be a virtuous circle. So money will come, now, there is the India stack, who basically has Aadhaar, has its fundamentals, and then money start coming. We are even talking about like an India stack fund, to be able to help the startups that will use Aadhaar as the fundamentals for their business, right? So we're getting involved more and more into this. Also, Europe has a huge opportunity with the GDPR regulation, and
is it coming in 2018?
In 2018, exactly. So, and it's not only a financial institution thing. It's financial industry will be heavily impacted by it, but any entity that holds data of anyone, should comply with that.
But when you talk about ID, it's not just one identifier. It's not just your name. There are many things within your ID. Who is going to be in charge of this? Is it individuals? Is it the government? Do you believe that we have to share all information with everyone, or we have to find a way how we can fragment this information and share small pieces to specific parties?
So, as I just said, we believe government should be the one entrusted with the management of identity, for sure. And I believe that as well. Because it cannot be a private organization who extrapolates your identity on your Facebook or your social data. It's not going to work. It's not going to be trusted by the counterparties. And obviously, the best example is that there is no reason why I should show my ID to prove that I'm over 18 to enter a discotheque or to buy cigarettes, right? So, or to buy alcohol, So you only need to know the actual year I was born. That's it. You don't need to see my address or any other data. So this is a very simple way to explain what we call the consent basis approach, where I should only let any organization that is looking to know anything about me only to see the relevant part of the data that are concerning that particular transaction.
So do you believe that technologies like blockchain in the future will be able to empower individuals and bring data ownership back to a person more than it is now?
So yes, absolutely. Today, when we talk about identity and we look at the digital identity landscape of startups, there are basically two big categories. There are the ones who are developing identity layers on the top of a distributed ledger, mostly for KYC, which is obviously one of the easiest, and actually it's not the easiest, it's actually the better understandable from a bank, right? So which is actually the easiest one to sell, which is the reason why a lot of startups are looking at it. And you can certainly find startups that are using either the Ethereum blockchain or the Bitcoin blockchain or even sovereign, which is so far from what I hear from the market, it is probably the best suited for identity data management. Okay, there are actually a couple of KYC startups who are built on sovereign, and we know the guys from Evernym, who is behind the sovereign foundation, and also there is something interesting in letting the control of that network to a non-commercial institutions. That is something that has legs, we believe. So we were talking about how the distributed ledgers can play a role. So they can definitely in the transaction side of it. Yeah. So if you think today the biggest challenge for in the financial industry is the fact that beside SWIFT, there is very little common infrastructures. These guys can actually exchange information, right? So if I have an account in Bank A and I want to open an account in Bank B, even in the same country, today, I'll need to replicate a lot of information.
Absolutely. So KYC AML has to be located multiple times.
Exactly. So now think of it in even two different countries, right? So this problem is totally compelling even in the UK. So imagine UK and Hong Kong, Germany,
But you're talking about complex models of data sharing. Who will be owning and storing the data in this case? Do you believe that the current legislation is capable of dealing with those new models?
So you are a blockchain expert, so you know that no one really is storing anything. When we talk about distributed ledgers, because by definition, that everyone is a collection of storage points. No one is really controlling all the database. But this being said, it's not actually a technical problem. It's actually a regulation problem. So I think we're really in early days because, as you can imagine, you cannot have a worldwide approach to that. You have to start somewhere. Probably EU would be a good place to start. And the fact that the ultimate goal of GDPR is basically be able to exchange data of the people across EU, right? So, in my opinion, the step after that will be, okay, how do we enhance, this data, and not as a form of control, which is pretty much what it looks like today, but transform it as an opportunity, right? A business opportunity for the corporations, but as well an opportunity for the European citizens to actually use their data better. At the same time, be more protected, but also, gaining speed in access to services, have them cheaper and faster, which is, which should be the ultimate goal of being able to share my data in the first place.
Do you believe that new technological developments will help that trend to continue, or will we actually be able to present our identity at the personal level, we'll be able to present our transactional history at the personal level? So who will be in charge of this information, and to what extent do you believe this information will become something which is in the public domain?
So it's hard to talk about transparency without talking about privacy, right? And so today you have a tendency to be more and more open, in the sense that different channels, not only the social ones, right, but the fact that look at the neobanks. They are all one of the first features that they offer to their clients is to be able to automatically, through APIs, connect with other bank accounts and see, a combined statement of all my accounts, which goes against of anything that every incumbent have ever done. I'm on NatWest, I only see NatWest. I'm on HSBC, I only see HSBC, right? So, and then Mint or Yodlee arrived and they gave that consolidation, but now banks are doing it. So there is a trend in which, of course, sharing data is, the kind of the starting point, right, for kind of anybody, including financial institutions. That's one thing. On the other hand, truth is that we are exposed. And we are exposed to a number of checkpoints and data points that we are not even aware of, right? So one of the biggest concerns is the privacy issue versus the open data issues are going to conflict or to cooperate, So because it's a trade-off. Today, it looks to me like we are giving up on privacy, and we have to accept the fact that our data are out there without having a real control over who is getting which information. But we, consumers, don't get much out of it. We are not really owning that data. We cannot resell it. Whilst we individuals have an enormous power with the information that we reveal about ourselves to corporations, and that material is precious. It's a precious material to be sold. So, and today the balance is clearly unbalanced. Not in favor of the consumer, but in favor of the ones who are actually, grasping this data. So Who is going to control them? As I believed before, I don't think there is anything but a neutral, commercially neutral, and possibly state-influenced organization, or maybe multi-state. I mean, we need the SWIFT for data.
Yes.
You know, and I don't know who should own that SWIFT, but it's certainly not one entity. And maybe it's something that, it's something that the European Commission, for example, after GDPR, should take care of. I don't have that answer. What I do know is that it cannot be obviously a single entity, no matter how big it is, and it cannot be a coalition of commercial entities either, because by definition you won't be able to include everyone.
Thank you very much. Thank you very much for your time.
Thank you, guys.